As you've probably heard by now, Palantir put out a press release on March 5th about how it is releasing its proprietary ERP suite on AWS, the Amazon Web Services platform. In this video, I'm going to try and make sense of what this means for PLTR. After all, it doesn't seem like a big announcement on the surface level, and certainly didn't get very much media attention, but I believe it ties back to Palantir's master plan for customer acquisition. I'll get to that and more. Let's go. Just at a high level, it's worth noting that with Jeff Bezos stepping down and Andy Jassy at the helm, the former CEO of AWS and person literally responsible for overseeing its success, with him in charge of Amazon, the $1.5 trillion tech giant, it's crucial to take a moment to think about the significance of what Palantir quietly announced on its investor relations website, which they also did redo recently. This is off topic, but investors.palantir.com looks very professional and is much easier to navigate. I commend Palantir for spending some time putting it together. To be clear, Palantir did not sign AWS as a customer. Actually, they are now able to sell their ERP solution to existing AWS customers. ERP Suite stands for Enterprise Resource Planning Suite, and AWS customers will get to rapidly deploy this after purchase through AWS, and its integration allows it to be fully integrated with the AWS cloud. From my non-technical understanding of it, ERP is essentially planning money allocation. It helps to answer questions like how to best spend, to best grow a given business efficiently. Palantir is able to access data streams and identify financial trends, which can lead to cost-saving suggestions. But please, if you have a more accurate understanding, leave it in the comments. Let's turn our attention to Palantir's official press release for some quotes and more explanations. The ERP suite has been optimized to operate on AWS. As a result, existing AWS customers can leverage the ERP suite quickly and dynamically to respond to their unique needs. Josh Harris, Palantir Vice President, quote, "We have been collaborating with AWS for the last year in a number of vertical markets. With this new ERP suite offering, we have seen an incredible savings delivered directly to customers in a matter of weeks. Working together with AWS, we look forward to scaling this effort to more customers faster." Teresa Carlson, Vice President of Worldwide Public Sector and Industries at AWS, quote, "We're excited to be working with Palantir to make this suite of tools available on AWS and to help our customers get to insights faster, unlocking the data they already have. Using AWS, Palantir's ERP suite can help customers offload the complexity, gain faster intelligence from their data, and make critical decisions to save time and expense." Examples of Palantir's ERP suite in action, and this is before its integration with Amazon Web Services. Energy company BP was an early adopter of Palantir's ERP suite. Within 2 weeks of installing the ERP suite, BP was able to unlock approximately $50 million in working capital and has the potential to unlock further savings if applied across their worldwide supply chain. And example number 2. Within days of installing the ERP suite, global chemical company Lanxess had visibility into its end-to-end value chain across multiple ERPs and the capabilities to simulate decisions and run complex what-if scenarios. Lanxess can now estimate and react to changes in demand and proactively make data-driven adjustment decisions to optimize its inventory levels in real time and avoid costly overstock or shortages. And this comes after Palantir has made a similar integration with IBM, allowing IBM to offer Palantir platforms alongside their own. And even before these two announcements, with IBM and AWS, Palantir reversed its previous strategy of non-Salesforce and started building a Salesforce last fall. Ultimately, the plan here, as I see it, is to use these big, established companies to push their software and drive growth and sales for Palantir's own fully fledged products. With an increasing sales team, a partnership with IBM to leverage an even larger sales force, and this newest development with AWS, Palantir is making strides in client education. Since very few know the exact power of PLTR's platforms, I think the aforementioned and demo day are even more strategical than one may initially realize. Recall my deep dive on Palantir's master sales plan.
I'm going to talk about the life cycle of an account. We break this down into 3 phases: acquire, expand, and scale. What we're showing you is how we go from a loss leading category, acquire, grow through the expand phase, and go into a positive contribution margin phase that we call scale. So as we grow these accounts, we'll be looking to move them into the expand and scale phases. So you can see what we're striving for, what is possible with accounts when we leverage the platforms and continue to invest our R&D dollars. It's not meant to be a timeline. Our objective is to make the acquire and expand phases as short as possible so we can grow the scale phase accounts. When we look at this as a whole, all customers should be scale phase over time.
Thus, this gives Palantir more flexibility in making investments back to push more customers into the acquire phase and to invest more back into the expand phase. The vicious cycle that should, as years go by, and yes, this won't be quick, but should turn the company overall profitable. Palantir's business model operates primarily through 3 phases: acquire, expand, and scale. In the first 2 phases, customers go through a pilot, acquire, and if the pilot proves successful, they move to a second phase, expand. In both phases, as Palantir proves the project's technical feasibility and it makes any necessary customizations to expand it across the whole organization, it runs those projects at a loss with a negative contribution margin. However, as the customer and account move into the scale phase, its contribution margin becomes positive and improve over time. All accounts should eventually hit the scale phase, meaning if there is anything worthwhile in a given contract, it should eventually turn into a very profitable endeavor. There should be no in between. It's more of a transition period, and I think that is huge for Palantir. And going up the staircase as they increase those clients in their scale phase should offer almost a staircase effect as Palantir is able to recognize more and more revenue over time. I certainly think this underlying focus of Palantir and its 3 phases is necessary to keep an eye on. For me, it's all part of the plan when it comes to Palantir. So when I see very little coverage on this press release, it makes me wonder why more are not excited about Palantir's integration with what is the world's most comprehensive and adopted cloud platform. It's a huge opportunity, but granted, PLTR will need to show that they can attract both big and small customers before Wall Street will take notice, and before it contributes to the business in a meaningful way. I'd love to hear your thoughts on this, and on my analysis, in the comments. Does this move the needle for Palantir? Until next time.